All right, for more on this, we are also being joined by Gaurav Sansanwal from Washington, D.C. He is fellow for the India chair at the Center for Strategic and International Studies. He supports the chair's commercial and economic engagement with stakeholders in the United States and India. Thank you so much for taking out your time and joining us on the show.
Thanks for inviting me, Jyotsna.
Right, so let's begin asking this. Trump presented the imported taxes, which he calls reciprocal tariffs, and they range from 10 to 49%. Before we get into the details of what gets impacted, if you could just give us your first reactions to this.
No, Jyotsna, I think given that this has ranged from 10 to 49, as you described, and that this is a part of a larger effort to address what President Trump describes as trade imbalances, wherein he's trying to target countries that have that the US is a deficit with when it comes to trade balances. When we look at that overall context and see that India's placed at 26%. So we find that India is actually on the relatively lower end of the pack because countries go as high as 49% for Cambodia or 47% for Vietnam. And so from that respect, I think the big story here is that this could have been a lot worse for India and that India stands as of now on the lower end of the spectrum.
Right. And now let's talk about India. I believe we can get into what sectors get impacted and the most by and how much and what does it precisely mean for Indians?
Yeah, Jyotsna, I think President Trump has been very clear in this executive order that this impacts all the imports coming into the US. But if we read the executive order carefully, we find that there is actually a list of exceptions. And so Annexure 2, which points out 37 pages of exceptions ranging from petrochemicals and to chemicals and other areas. So overall, the areas that will get heavily impacted would be agricultural goods, apples, dairy, rice are some of the ones that have specifically been mentioned in the commentary. The auto industry will get impacted, and that includes the components industry. The some of the equipment industry will get impacted, specifically the telecom equipment in routers and switches, and of course pharmaceuticals as well. And so when we think about this, the best approach is everything gets impacted except the exceptions list. But the sectors where India has a relatively larger share of exposure, ranging from agriculture to pharma to auto, and these are also the sectors which are politically important for President Trump to address trade imbalances in. I think these are going to be the highlights. And for the average Indian, I think it's also important to emphasize that you and I are going to be keep talking about tariffs this entire year. Because we've seen in the past few weeks that President Trump has shown some flexibility in approaching the issue, but also the fact that India is negotiating a bilateral trade agreement. And so this is not the final word in it.
Hmm.
Yes, this is the structure now, I suspect we will see more revisions.
Right, and because you talked about reactions, when it comes to reactions, most countries are opting to react aggressively, like Canada. Some of them are trying to keep back, and then, for example, UK and Mexico, they're waiting it out. Now, Trump said that India is going to drop tariffs substantially. Is that what we're looking at?
In certain sectors, yes, Jyotsna, and that's largely from an economic reform perspective in India. That is largely the direction in which the country has been headed, which is why you see the overall weighted tariffs of India having come down in the recent years. They used to be well above 20%. Now the WTO figures are around 17%, and after the recent budget announcements, India is already at 11% or less. And so overall, there are areas where India sees that its domestic industry is now prepared and more competitive to handle competition. And in those areas, it makes sense for India to compete more freely and to allow that consumer choice for its people. So I would not be surprised if India sees this as an opportunity to actually do what we describe in the trade universe as tariff rationalization, right?
Hmm.
And so there's always an opportunity in a crisis, and I think that is how India would be looking at it as it negotiates the trade agreement with the US.
And now that you're based in Washington, you can probably bring us more reactions from there. And most economists predict that trade wars could stall the global economy. Are we actually looking at a global trade war?
Josna, that's been last few weeks. I think we are seeing a fundamental sort of restructuring of trade balances and trade relationships between the US and its partners. And for most countries, including India, US is a really, really important trade partner. India has a nearly $50 billion surplus with the US in its trade. And so overall, given that President Trump is determined to restructure some of those relationships, yes, this will be a huge shock for the industry, which is why we are seeing the reaction in the markets, which is why we are seeing anticipation in the markets, and there's been uncertainty because there's been back and forth. So I think yes, we are likely to see a lot of back and forth in the coming weeks. But I think dust will settle down as countries identify what their priority areas are, and there is give and take, and there are concessions to be made. So yes, we are looking at economic uncertainty because of the large exposure to US as a trade partner. But things will settle down as countries talk, and that's been happening as we've seen between US and Japan and Korea and others. Yeah.
Right. And talking of America, Trump did say that he's doing all this so that he can get more money in the Treasury. Will that happen?
Jyotsna, that is one approach that President Trump believes in. He often talks about President McKinley in the U.S., who looked at tariffs as a way for the exchequer to make more money. Overall, of course, the consensus in the trade community in the last few decades has been that tariffs are not a tool for the governments to make money. It's a tool that you use to address equities in trading relationships. But this now is an approach to see how it can be used as a tool. That is his idea. And given that now it's being implemented, yes, there will naturally be some reaction to that, and but we have to wait and watch how much of this materializes. Because somebody would need to sit and do an econometric analysis to understand what how much benefit was there at the end once you factor in the fact that other countries will also react to this in their own different ways. And sometimes they do that in a way that is not easily discernible when they look at non-trade barriers. So some country may react to this by putting more non-trade barriers, which also hurt. So overall, yes, I think that is his intention. Will he be successful? I think the jury is still out on that, and we'll have to assess that once this game is played out. Right now, the turf has only been set, and this is fairly early.
Right. And of course, I think we'll be able to see that very closely if we talk about early trends. So we will have a report on that, on the early trends as of now. If you could just stay with us and give us your reaction to that.
Sure.
Right. So early trends in financial markets on Thursday show risk-off bets and lower treasury yields. While there is no break of prior ranges on market rates, it still smells like they want to go lower ahead. Now, AFP reports that gold surged to a new record high on safe haven demand, extending its all-time highs to 17 times this year during a 20% rally. Now, Trump's latest salvo also turbocharges the worldwide trade war. He began a conflict likely to be marked by a tit-for-tat strikes that destabilize supply chains, stoke inflation, and encourage more countries to form alliances that exclude America. Trump has announced a swathe of tariffs that he hopes will fund income tax cuts and incentives manufacturing reshoring. In the long run, it may deliver positive for the U.S. economy, but the measures taken mean a painful transition period ahead. The dominant reaction is one of apprehension on what this all means for activity, and hence another push lower in market yields has been the main outcome. The impact reaction has been lower equities as priced from the futures. But the picture being painted from a generic market sense is negative for stocks. Anticipate further fallout over the coming days. Now, Australian blue chip stock index fell nearly 2% after the Trump tariff announcement. this currency market has faced major volatility around the U.S. tariff announcement. The new global trading regime still argues for a stronger dollar, but it won't be easy to convince markets protectionism is here to stay. The Canadian dollar and Mexican peso held up gains thanks to USMCA exemption from reciprocal tariffs, while the yen remained the favorite hedge as risk sentiment soured. The yen strengthened over 1% against the US dollar in early exchanges on Thursday. The worst hit region by the tariff announcement is undoubtedly emerging Asian currencies, with several countries hit with high tariffs. Right. So we just gave you a report and we talked about how Asia is being impacted. These are the latest trends that market are showing. What is your reaction to that?
No, Jyotsna, absolutely. I think, as you pointed out, there has been volatility, and that is to be expected given the sharp shifts. Also, because certain countries always use currency valuation as a method to respond to tariffs, and that's one of the barriers, in fact, that countries track. Because you could just change the valuation of your currency and benefit irrespective of what the tariff on you is. And so I think the pathway out of this is to end the economic uncertainty around tariffs and negotiate and get concessions, and that would require some giving some concessions as well, which is what India is managing to do on the sidelines. Because while the big story today is the tariffs, we should also remember that the two countries are negotiating a trade agreement, which India is trying to fast track, given that it has a fall deadline. And if the bilateral treaty comes through, that would give a positive signal to the markets, at least in the US India lane, that there is now stability, and we can expect this preferential trade arrangement to last for the next 4 years, at least, if not beyond. So I think that is the path for the rest of the countries, that you need to sit and exchange and do concessions. Otherwise, if countries keep doing the back and forth as they're doing right now, then naturally there will be volatility.
All right. Well, of course, as you said, juries is out, and we'll have to wait and watch what kind of long-term implications this brings us. But thank you so much for coming on the show and giving your perspective.
Of course. Thanks so much, Jason.